Hi there, traders. This is Brad Gilbert with today's trading action. All right, now the key event from yesterday, Canadian inflation numbers much better than expected. Sort of trimmed back the likelihood of a rate cut in on the 24th of July, right? So a little bit of wild price action, I can tell you, on that release. Just looking at the major currency pairs, okay, everything's within sort of recent ranges, okay? Euro, sterling, Aussie, Kiwi, dollar CAD, you got dollar yen still cruising topside with the threat of the BOJ at some stage, and dollar Swiss is starting to move up with the dollar index pretty steady, right? So nothing really to sort of pull you out of bed. Looking at where the markets are to start the sort of day, bit of a mixed sort of bag here on the US equity futures, and that's creating a bit of a mixed bag outcome here on the major currency pairs, right? So no uniformity across the markets, and it's pretty indicative of what's going on. Now today, it sort of snuck up on me actually. We've got the Aussie CPI weighted CPI, the indicator, I should say. Just repeating myself there. The GfK consumer sentiment numbers, always worth a look for Euro. But these this indicator number, right? It's like indicators on your charts. It's an indication of what's going on. The central bank has referred to it. 3.6%. Previously, excluding volatile items and travel, it was 4.1%. So it is worth looking at because the key Aussie CPI numbers are released quarterly, right? These numbers are the monthly number to try and keep us in tune with what's going on. We don't even know what's in the basket or how they work this out. So it's really the RBA are just helping themselves here, but it's worth having a look at. And when you think about the opportunity there, if you come back into the Aussie, sort of starting to piece together where the potential opportunities are, just get your charts tuned up because it's sort of like banging away here. If I just get that across, on the hourlies, you know what? I haven't been paying too much attention because it's sort of been a bit skittish with the US dollar moves and just the random Aussie numbers themselves. But we are starting to really narrow in the range here. And there's two things that can happen. We have the economic data release, which blasts it up or down. Or if there's nothing happens, the price action will get closer to go up through here, down through here, give us a new high and a new low, and then be back here again. But today we have the inflation indicator, right? So we're looking for an opportunity here, potentially. Now, the RBA has actually said they are on hold for an extended period of time. If we get stronger numbers on this indicator, it will go, you'd think it would go up. At the same time, if the numbers backed away very quickly, well, then we might get a move to the downside because that would mean the RBA may have to change their rhetoric, their forward guidance on what's going on, right? So bit of a stretch, but that's all we've got in front of us just at the moment. And if you look across the Aussie crosses, if I just sharpen up those charts to the current market where we are, you see there's not a huge amount going on. I like the idea of Aussie yen potentially going down, especially, all this talk about the yen or the BOJ intervening in the yen. I think it's a lot of jaw boning, which is just a lot of talk. But it's yet to be seen. Now, the Aussie has been outperforming a lot of crosses based off this higher rates for a higher period of time. So stronger rates, you'll see the crosses go up, right? How far? Depends on how big the numbers are, right? At the same time, baked into these numbers are like higher rates. So if we do get a weaker indicator, you'd think there would be some movement to the downside. That's as much as I can give you because this is the indicator. It's not the real core CPI number itself. Right, so that's coming up in about 20 minutes. And then if I scroll down here, we are starting to get into some of the, the home sales, etc. numbers out of the US, right? It's really Thursday and Friday things liven up. So sort of hold your hats at this stage. Aussie, if you're around, check it out. Take this data with a grain of salt. I've seen some numbers come out previously and it hasn't moved much. And I've witnessed other ones which it has started to move the market around. The one key ingredient we are missing is like the overall trending conditions for like the Aussie. It's not really going anywhere, right? And if I look at the the daily chart, I mean, it's been trading between 69 and 63 since November. Okay. And if anything, it's even been tighter the last 2 or 3 months. So, on the long-term aspects, it does look like there's room for a move to the top side. But what we need is, for that, we need some really strong numbers. And I'm talking, up above 4%. They'll talk about raising rates, right? That's where the real gravy will be. The top of the range here for this indicator is 4%. We get something above that. And for the excluding volatile items and travel, right, you take those out. If you get something up around 4.5%, they will raise rates and the Aussie will jack up, right? I think that's the real trade on this release. All right, guys, hang in there, right? The market's in a little bit of a stalemate. It goes through periods like this. You just got to wait, be patient, and let the penny drop, and then we can sort of piece it together from there. All right, have a good one. All the best. Cheerio.